First of all, thank you all for joining us this afternoon uh, for a very important topic, why SM REITs could be the future of wealth creation. Well, today, along with me, Abhimanyu Arora, we have Mr. Samir Bhandari, who is our co-founder and CFO, who's going to be part of this webinar. Um, just to give you a little how this webinar will go, we'll just take approximately 15 or maximum 20 minutes on the presentation to touch base on different aspects of SM REITs. Following to which we will like to take in the Q&A, most of which, and of course, will be answered by Mr. Samir Bhandari himself. So if you have any questions in between, please put in your questions in the question place. So let me just start off with the topic. Before that, just let me introduce you to the leadership team at HBITS. Mr. Shiv Parekh, who's the founder and CFO. He incorporated HBITS in 2019. He's a MBA from Harvard Business School and Bachelor's of Science in Engineering Physics from Stanford University. He's Forbes 30 Asia 30 under 30 2022, as well as Business World Disrupt 30 under 30 2022. Along with us is Mr. Samir Bhandari. Would like to introduce him. He's Chartered Accountant batch 1987, 89 batch. He did his Ahmedabad. 89, he joined Bank of America, Mumbai. We shuttled between Mumbai and Hong Kong, where he was till 96. From 96 to 99, I guess 99 September, he was part of UBS Singapore as a managing director. 99 September, he moved to JP Morgan Bank, Singapore, till 2008 June. Well, June 2008, he moved to Lehman, which was basically further taken over by Nomura Securities. From June 2008 till 2021, he was part of Nomura Securities Global, and he was part of Global Securities, and he as well looked into fixed income, equity, and he was as well a part of Global Exec. Well, that's about Mr. Samir Bhandari, who is part of us with us. I've explained about the profiles. A little bit about myself. My name is Abhimanyu Arora. Overall, 25 years experience, worked with banks like HDFC, HSBC, DBS, Singapore, and Kotak. Majorly did my designations there as into wealth management and treasury. I'm a graduate from Mumbai University and did my corporate finance from IIM Calcutta. Well, coming to the further information, who we are as an HBITS, we are basically a pioneer in fraction ownership in commercial real estate since inception. That's been what our business and what we've been doing. Well, in last 5 or 6 years, we are able to fractionalize 500 crores of commercial real estate A-grade assets. Further, when SEBI came into picture, we got our license on 1st of April for SM REITs. And what we look forward to do with a SEBI structure is pure transparency, liquidity, institutional grade access. Our vision is, of course, democratizing commercial real estate investing with trust, governance, and growth. Well, the wealth creation challenge, which is, of course, a challenge with each and every individual who look forward to earn the wealth in the right manner. Well, Indian investors prioritize safety over returns. That is the nature which we follow, which surely depicts in the next report, which says 55% of household financial savings are still in FDs, RBI reports. Well, what I remember is this was posted in April 2025. FDs and bonds barely beat inflation, which is negative real returns post-tax. Mutual funds, of course, volatile. Returns are fluctuating with equity markets. As a result, investors lose long-term purchasing power. And that's how our product, the SM REITs, comes into picture. How SM REITs is, which we call as small and medium real estate investment trust work. Well, investors come in, they pool in funds with a minimum ticket size of 10 lakhs, and they park in money into a particular scheme, which is a grade A leased commercial properties, which is, of course, regulated by SEBI. These particular offices are where, as I mentioned, A grade, could be in BKC, in Gurgaon, could be towards the particular in market, could be in Bangalore on the MG Road or a electronic city, a proper glass facade, beautiful buildings, wherein the tenants are MNCs and corporates. Like if I talk about a bit about our portfolio, we have Microsoft, we have ICICI, so likes of all the A-grade tenants. And how? So let's the investment is done. What do you get? A quarterly income distributed to investors, as well as they are listed on the exchange, so that in the form of NAV, so that you can buy and sell anytime. What's the benefit? A regular passive income, which we're talking about here, is quarterly rental payouts, 8%. Let me tell you, 8% is target free, is tax free, what we are targeting, and long term capital appreciation. Role of SEBI, why it matters, formalized in 2023-24 under SEBI REITs regulation, ensures transparency, governance, and investor protection, which is, of course, the first three thumb rules of SEBI when they happen to approve a particular product. Retail investors get institutional level access to CRE, which we happen to detail it in each and every thing. Well, this is a slight comparison in how different products in traditional options are, and how their returns and liquidity and volatility and payout happens. To talk about FDs, bonds, mutual funds, and SM REITs, returns in FDs are approximately 6 to 6.5%. They're not inflation hedge, but yes, they have liquidity. They're not backed by real estate. And of course, since its liquidity is there and we all know what fixed is, so the volatility in that particular is low. And payout is annual. Well, you can surely choose a quarterly or a monthly, but when we talk about returns in terms of this, you can it's basically annual, which we tend to choose. Bonds around 7 to 8%, inflation hedge around partial, liquidity yes, volatility medium. Why volatility? Because we know the current markets, there were Fed rate cuts accordingly in RBI rate cuts, so there's a little kind of volatility over there. Payouts are semi-annual. Mutual funds are market linked, as we all know. Uh, Liquidity is, of course, because it's listed on the exchange. Volatility is high because it's backed by different stocks in a particular fund. Payouts are market dependent, and of course, as per your discretion, you want to go for dividend payout, dividend reinvestment. That's how it is. In SM REITs, which we are talking about today, we're talking about an 8% tax-free quarterly return payout, with, of course, capital appreciation, which mostly turns out to 13% to 17% IRR. Inflation hedge, yes, because it is higher returns as compared to this. Liquidity, yes, because why in the bracket is particularly mentioned listed? It's a new product for you. So yes, it is listed. Just to answer, backed by real estate, yes. Volatility, low, because the payouts which you get quarterly are in a form of rental agreement. So they have a strong, tight agreement which will give you payout on a quarterly basis. Why diversify yourself and your portfolio with SM REITs? Traditionally, investing options were FDs, bonds, mutual funds. But what is the nature behind this? FDs are basically for short-term parking, maybe around 3 months, 6 months, and some people do park it for 1 year or 2 years. But of course, returns are low. And when we talk about the post-tax return, they're very low. Bonds are for a medium-term stability, which we have to look. And we talk about a 5-year or a 3-year bond, and that's how the market stability is there. Mutual funds are basically a long-term investment, and we always say that when we invest into equity or mutual funds, let's the horizon be as much as possible. In SM REITs, when we talk about how your investments will flow, we need to look at two particular parts. Predictability, quarterly income will be aware as before you even sign the contract, or even if you park in the money into this particular investment. Inflation protected real returns, and it's of course a part of diversification. As we know, Indians, as Indians, we love to invest in real estate uh, as compared to residential versus commercial. This is a commercial real estate which we are talking about. So diversification plays a big major role in this portfolio. And of course, when there is a capital growth, it gives you an extra edge on other investments as well. Who should invest in SM REITs? Well, HNIs, family offices, well, they're already early adopters. We have seen that in fractional ownership as well. Conservative investors, like when people are actually, as we're looking at for retirement planning, they can surely park money over there. And as well as people say that, uh, when I read a lot, people tend to just talk about that they used to, so their risk appetite is low. So let me just park in money and do the, get particular returns. You can always do that when in this particular aspect, because you might be working somewhere and you want to have a kind of a product which is conservative. So it will safely give you quarterly payouts. Retirees, which I've already covered, young professionals, passive income and long-term wealth creation, corporate treasuries, PMS, and mutual funds, because part of their diversification of investments should be balanced, could be equity and debt, and further, if it's real estate and the exposure is high, returns are high, so they should surely invest in this particular asset class. Smart wealth creation strategy, beating inflation with real returns, which is the key parameter for any individual when they look forward to invest. This should be the main point when they look forward to do. Of course, diversify beyond FDs, bonds, and mutual funds. As a person, I know that when I started investing in FDs, and probably then I moved to mutual funds. Well, this is an added asset class to you, where you can diversify and make some investments in this, which give you better returns in the same capacity of risk. So automatically gives you an upper edge. Earn quarterly passive income. Benefit from capital appreciation of grade A CRE. Well, when we talk about capital appreciation CRE, at the entry point, when you're investing, you'll not only come to know your quarterly passive income, which is going to be coming, but as well as the valuation of the property, the entry price point, which you'll be entering into. SM REITs is basically the next evolution of fixed income product. Why HBITs? Since I've already shared with you, we incorporated in 2019. Since then, we have been actually having legacy in fractional CRE investments. We actually follow a rigorous due diligence on every asset, for which we have covered a pure uh, acquisition webinar last week. And if required, you can surely go to our YouTube channel and download that. Well, we look at only tenants which are backed by blue chip, like MNCs and corporates. I've already talked about Microsoft, Mane, SmartWorks, where the subtenant persistent systems. We talk about Gupshup Technologies. All these companies are approximately $1 billion out. Institutional grade in asset management. We are, and we will be, digital first onboarding, investing like IPOs, easy, transparent, and seamless. How you actually, invest into IPO, it's going to be the same simple process. Uh, you park the money, it will show in your demat and trading account, and you can trade them on the NSE or the BS. Payouts are distributed in the form of quarterly rentals, which are exempt from tax, as they're considered as return of capital, not return on capital. So this is basically the overall structure, how the SM REIT works. To talk about further thing to it, we are here, and I'll call in Mr. Sameer Bhandari for further Q&A and answer to your questions, please.
Just before we go to Q&A, I do think wealth creation is very, very important, especially when you're starting your journey of investing. Uh, a lot of people look at very safe instruments like fixed deposits, but obviously, given high inflation in emerging markets, a lot of it actually gets wiped out. Uh, so you earn income, but you don't create wealth, which is where we feel a new product like SM REITs actually adds value, because it not only gives you tax-free returns on a quarterly basis, it also gives you capital appreciation, which again goes to add to your overall wealth creation. And if you compare this product to, even large cap mutual funds typically give you around 12.5% per annum. This product, if managed well, which we think we do, can give you returns of anything between 13 and 17% IRR, which is a combination of the rental income which you receive, roughly 8 and a quarter, and the capital appreciation. And hence, wealth creation is definitely there in a product like this. And that's what we would like to emphasize today. Don't look at only your current income, look at how you can actually create wealth. And moreover, because this income you get quarterly, you can actually use this income to invest in whatever you want. If you want to invest in stocks, you could use that to invest in stocks. If you want to put in hybrid mutual funds, you could actually do that. So this regular income which you get, which is tax free, definitely you could use it for other purposes and create incremental wealth for yourself. And that's really the topic today. It's about wealth creation. It's not only about earning a certain income. And now we'll just go to the Q&A.
Sure, Samir. While we're doing the Q&A, after a few questions, I'd probably like to ask you a few questions as well, because you've been part of fixed income globally as well, in equity as well. So I'd like to have some insights from you as well. So, but
Of
before
course.
that, I'll just ask you questions. So I have a question from Mr. Ravikant R. Please explain exit options, both individual exit case and total project exit case by HBITS.
I guess, Ravikant, there are two ways. So if you're looking at an individual exit option, so as Abhimanyu mentioned, these would be listed on either the NSE, BSE, or both. So you always have a right to sell your units in 10 lakhs equivalent each on the exchange. And as long as you can find a buyer on the exchange, you can exit anytime based on the price on the exchange. As far as total project exit is concerned, typically HBIT after 3 to 4 years, we'll start looking at exit options because we obviously want to return a certain kind of IRR to our investors. And once we decide to exit and once we have exited, we will sell the SPV to a third party and basically delist the SPV from the exchange. And that's how it's going to work.
Well, Sami, I have a question from Mr. Dilip G, Masood M, which is the same question. Can you please let us know when you're launching your first SM REIT on exchange?
So the Dilip and Masood, we obviously scouting for the right property. We do think we have identified that property. We are working on a term sheet with them. The due diligence of the property is pretty much done. So we are hoping, and obviously SEBI has a certain process, right? So we can't talk about any property till we file the DRHP. So it will take a bit of time, but we hope to come into the market in the next 2 to 3 months.
So I have an additional question from Mr. Dilip G, which I get. The two listed SM REITs have very low traded volumes, not more than 5 to 10 units every day. So my view is that liquidity is not there in SM REITs based on what data shows.
I guess,
So
Dilip, the
I guess,
liquidity is there. Liquidity is there, but it's obviously, see, it does not trade like equity, right? Because this is an asset class which people typically will hold for long term. Because here you will get income which is tax free, so you don't need to trade it as such. So most of the investors, I would say, will hold it for at least 2 to 3 years. And hence the number of units which are going to be traded are not going to be very, very high. There will definitely be trading, but just not, it's not going to be as liquid as, say, a Reliance share or so. And you are absolutely right to say that.
well, totally correct. So just to give you other side to it, liquidity is surely there. So I know a set of clients which are part of a particular group. They all applied in together. Only two of them were able to get that, and eight were not able to get that because there were no people selling it. So yes, the liquidity is there, but they are not people to sell it. As the aspect of this particular investment is long term, as you need to give time for a property to grow. Well, we have a question from Mr. Ravi Kant. Are the returns 100% as rent? Any tax protections?
So Ravi, as we mentioned, it's a combination of rental yield plus capital appreciation. So rental yield typically will be between 8 and 8.25%, and this will be tax-free because this will be treated as return of capital. So this is definitely tax protected in a way. When you sell your units, those will be treated as capital gain. So the way it would work is if you've invested 100 rupees and you've received 8 rupees every year as a rental, after 5 years, your capital will be at 60 because you would have received 8 into 5, 40 as rentals. And this will be reduced from your capital. And so the capital then will become 60. And if you actually sell it at, say, 100, then on 40, you will pay long-term capital gain of 12.5%. So it's a very, overall, it's a very, very tax efficient structure, which we are structuring, and mainly to help our individual investors.
Well, we have a question from Mr. Yogesh Patak and Vedant Nanavare, which same. What is the minimum investment required?
So as Abhimanyu pointed out, as per SEBI regulation, it's presently 10 lakhs per unit. We do feel that as this becomes popular, SEBI will reduce this 10 lakhs to 1 lakh, maybe in another 18 months or so.
A question from Mr. Akhil Goyal. What is the expense ratio of managing of these assets? Who decides any change in the expense ratio?
So presently, there is no, Akhil, there's no set expense ratio as such, because as you know, managing real estate assets is quite different from managing cash equities. So right now, the expense ratio is not set, but I'm hoping that over time, SEBI will set the expense ratio, and they have to then adhere to them. But presently, there is no expense ratio set as such.
Then we have a question from Mr. Suresh. How to know that the new team managing SPV is doing well, will do well?
Suresh, I guess it's not the new team because HPIT used to be in the fractional space, which was unregulated. After April 1, once we got our license, now we are regulated. But the overall team is actually the same. So the team hasn't really changed. So the same team will actually be managing the new SPV also. You're on mute. Abhimanyu, you're on mute.
Payouts will be considered as dividend or it will be added in income? Question from Mr. Masood M.
As we said, neither, because it will be treated as return of capital, which it will reduce your capital and it will be very tax efficient structure. In your hands, Masood, it will be tax-free rental income, which you will receive quarterly.
Question from Mr. Rajesh Nair. If buying selling happens on exchange listed stock, then can we assume that we won't have any direct interface with HBITs or any company that managing the REITs?
That is correct, Rajesh. You will just go to the exchange and sell your units. You don't have to interact with anyone. It's just your brokerage account, and you trade through that.
Question from Mr. Masood. Payout will be considered as dividend or it will be added in income?
So this I've already answered, Abhimanyu, earlier.
Right. So it is, of course, it will be added into your income, but yeah, it's tax-free for the first 5 years or 4 years till the holding period, and further it is going to be long-term capital gain tax, as Sameer has already answered. Question from Mr. Siddharth Manpeti. Do we get loans on the SM REIT stocks we own?
Absolutely. You can go to any bank or any broker who can give you loans, because these will be listed on the exchange like stocks. So you should be able to get, my guess is anything between 50 and 70% against it.
Right. Question from Mr. Yogesh Patak. What is the lock-in and we can get can we get monthly rental?
So there is no lock-in for you, Yogesh. You can sell your units anytime. Of course, we have a lock-in for the person who's leasing the property. Now they will pay monthly, but we are distributing it quarterly because it's a new process which we are starting. So right now the payout is going to be quarterly, but probably down the road we may start giving monthly.
Question from Mr. Suresh. As mainstream REITs, will SM REITs disclose NAV every year?
Absolutely, Suresh. We are obliged by SEBI to do a valuation every once a year at least. We may do it more often, but at least once a year, and we will be disclosing the NAV. That is correct.
Question from Mr. Ravikant. Great. Oh, sorry. It's great. Thanks for clarifying.
It's a
Thank you very
comment,
much
yeah.
for the comment. Question from Mr. Venkata Balakrishnan Sadam. Is there any defaults on quarterly payout?
I guess, Venkat, the key question you need to ask yourself, who is your tenant? Now, if your tenant is Microsoft, do you actually feel that there could be a default from Microsoft, which is a $1 trillion company? So we are very, very confident that there will not be any default. So far, in the last 4-5 years, we've never had any defaults on the payouts. And to answer your question, and to answer Yogesh's question, where he talks about rental escalation, yes, typically you have 5% rental escalation every year or 15% in 3 years.
Question from Mr. Vedant. Can we buy more than 2 units?
Vedant, the answer is yes. You can buy units up to 25% of the asset. One person can buy up to 25%. So if the asset is 100 rupees, you can buy 25 that. So to answer the question, yes, you can buy 2, you can buy 3, you can buy 5, you can buy 10. As much as you buy, as long as the value of your units is less than 25% of the asset.
And just to add in, and it has to be in a multiple of 10 lakh rupees. So every unit is 10 lakhs. Question from Lakshit Bhatia. Will you pay broker's commission while letting out property? Do we have experience in co-working space?
Will you pay broker's commission while letting out? So Lakshit, the properties we buy are already pre-leased. So we don't need to let out the property. But yes, if the tenant leaves and we have to let out the property, absolutely we pay broker's commission as per the commission. And do you have experience in co-working space? Yes, we have. In fact, we have 1 or 2 co-working space people also who are leasing our properties.
A question from Mr. Akhil Goel. Who is the majority owner of the REIT?
So Akhil, there is no one owner of the SM REIT. We need to have minimum 200 investors in each SPV or each SM REIT. So, and you cannot have more than one person owning 25% of the REIT. So there are various owners. Typically, you will have at least 250, 300 owners of the SM REIT.
It's the same question from Mr. Vedant. How many maximum units can we buy? Which is answered 25% of the asset value. Mr. Sunil happens to ask, how long will the income we will get 8%? Is it fixed? Kindly explain a bit on capital appreciation.
So firstly, the income of 8% is in the first year. Then you could get escalation, rental escalation. If we assume that rental escalation is 5% every year, then the second year you will get 8.4. The third year you will get 8.88. So that's how the rental income will increase. And how do we get capital appreciation? Commercial properties sell on cap rates. So what do I mean by cap rates? So when you buy a property where the rental income is 8%, then 8% becomes the cap rate. Now, assuming that the cap rate remains the same, you bought it at 8%, but after 5 years, your rental actually has reached 12 or 13% because of the escalation. You will actually be selling at 8%. So the whole 5% escalation which you get will go to you as profit. And that's how the capital appreciation actually happens. So it's a combination of rental escalation, uh, compression. So if interest rates come down, typically you'll also get cap rates compressing. And of course, if we are buying a property which is undervalued or under rented, and when you actually rent it at a much higher rate, that's also when you get capital appreciation. And commercial real estate market has been very, very strong in India, especially Mumbai, Bangalore, and Pune, where we've seen maximum capital appreciation.
Question from Mr. Siddhartha. Any data available on the percentage of blue chip tenants for SM REITs?
There's no data as such, but I'm sure. So right now there are only two SM REITs which are listed on the exchange. So if you Google it, you should be able to get the tenants. Most of the, I can tell you, at least from our side, when we launch it, our tenants are going to be definitely blue chip.
Question from Mr. Suresh. If I want to hold this asset for 2-3 decades, is it good idea? How to understand the effect of depreciation of construction or long term?
So one of the reasons, Suresh, where we look to sell an asset after 3 to 5 years, because as the asset gets older, you have to actually spend money on the asset to get the asset to a certain level. So we typically feel that selling an asset after 3 to 5 years is a much better strategy than holding an asset for 2 to 3 decades, because as you mentioned, the construction has changed, it's depreciating, and then you have to put a lot of upkeep. When there is upkeep, that means you've got to ask money from the investors to do that, and that's the rationale of trying to sell it after 4 to 5 years.
Question from Mr. Arjun Sachdeva. What happens after the capital is paid? Let's say 100 rupees capital, or return of capital for 12 years. What happens to dividend after that? Tax free or tax at slab?
So obviously we'll have to do a bit more study around this, but that's a great question, Arjun. You will To answer your second part, the rental income you will still continue to receive if the property is leased, and what we'll have to create is a new kind of capital at that point in time to make it tax free. But honestly, we haven't really thought about it such long term because we do expect to sell the property in 4 to 5 years time. But we will have clarity once we launch our IPO that after 12 or 13 years, what happens to the capital.
Great. Mr. Venkat Balakrishnan happens to ask, who will pay the rent? I mean, from where the rents will come? Is it from HBITs or somewhere?
So the rents will be paid by the lessee. It will go to a trust, and the trust will then pay the rent to the SPV, which will then distribute it. So it does not really come from HBITs. It comes from the lessee to the trust and to the SPV, and then gets paid to you.
Is another question which says, if we buy a unit in middle of cycle, such that if property lists and we get in after 2 years, do we get an exit early along with all other investors? Is there a tax implication?
So the answer is you will get exit. Exit is like it's in two ways, right? Either you could sell your unit in the market, or when we exit, say after 4 years, and you've come in middle at 2 years, you will get exit after 2 years of holding. And it will all depend on what price you bought the unit. So if you bought it at 102 and you're selling it at 110, then based on that you will have to give capital gain. The tax implications of the rental will be the same, because as wherever you come in, it will be shown as a reduction of capital when you actually receive the rental. So the tax treatment will be the same. The long-term capital gain might be different based on where you've actually come in and at what price.
A question from Mr. Shanti Prakash. Can you please tell me, is the REIT is also purchased from your website or only from BSE or NSE platform?
It's actually, Shanti, it's going to be listed like an IPO. So you will have to subscribe to an IPO, either through a broker or through a platform. Obviously, we will help you navigate the whole thing, but it's effectively going to be an IPO, which you'll buy from the NSE or BSE.
Question from Mr. Suresh. Will there be multiple tenants or only one MNC as tenant, as SM REITs are small buildings? Just my guess.
There could be one large tenant. So we might buy a building, Suresh, or we might buy separate floors. Most likely there will be multiple tenants. There may not be one tenant. Or if the whole building is occupied by one tenant, then obviously there might be one. But typically, my assumption and my belief is there will be multiple tenants.
So, question from Mr. Akhil: how will the exempt income from SM REITs be reported in the tax return? The amount received as distribution will be shown in my tax information statement, right? How can we claim it as tax exempt?
So Akhil, we are going to show it as return of capital. So if you've invested 100, instead of passing it on to you as rental income, we will show that your capital has gone down from 100 to 92. And this 8 is basically return of capital. And that's how you will have to reflect in your tax returns also, for which obviously you will get a certificate from us. And as and when you sell your units, depending on that day, what the value of your capital is. Suppose it's 50 and you're selling it at 120. On that 70, you will have to pay long-term capital gain if you sell it after 1 year.
The question from Mr. Ravikant: what can I expect from your first IPO?
No. When can I expect?
When can I expect your first IPO? Okay.
So Ravi, as I mentioned, we should be coming out in 2 to 3 months.
If you're selling the asset after 5 years, what will happen if I continue to hold the units in my DMAT?
So if we are selling the asset, just to clarify, we will actually delist the assets from the exchange. So it's going to be delisted, and when the SPV is sold. So definitely you will get effectively the proceeds of the asset into your DMAT account.
Great. So I have a similar question, but in a different format. Mr. Yogesh happens to ask, if I want to sell my unit after 5 years, what will be approx appreciation in 10 lakhs investment?
So Yogesh, obviously we don't want to promise anything, but if we get say an IRR of 14%, assuming, of which 8% you receive rental income, then you should receive 5 to 6% appreciation per annum. So in 5 years' time, if you compound that would be closer to 30-35% appreciation. So on a 10 lakh investment, the appreciation could be 3.5 lakhs, 3 to 3.5 lakhs.
Question from Mr. Siddharth. Is there any amount of undivided share of the property that gets given to the unit owner? For your information, in Hyderabad, purchase of real estate property is given as undivided share of the land on which the property is built.
In this case, it's a REIT or it's a SM REIT. So we deal it. It's like a financial instrument for you. So you will effectively be the owner of the property now. Now, if the property sits on land, then you'll also be owner of the land. But most of our buildings are basically buildings, right? So you'll be just owner of that area, part owner of that. So assuming you have 10%, you'll be 10% owner of that area. One question which we missed earlier from Suresh:
Yes.
where can I get the download of this webinar? Unable to find the previous ones. No worries, Suresh. Abhimanyu, if you can contact, he'll be able to send you details of the webinar. Normally, most of these webinars are on YouTube or on our website also, but we'll be happy to assist you.
I'll make it a point that it's part of the HBITS YouTube channel. And if there is any webinar which is missing, we'll try to get them all uploaded over there. Question from Mr. Pradeep Kumar. How to check IPO in your website?
So Pradeep, we'll be doing a few things. Once the DIP is filed with SEBI, it will be on our website. Plus, we will be sending newsletters to our investors also, so that you know exactly what's happening. So we will keep you informed, and as and when a new IPO is launched.
Mr. Parag Teli, question. What if I invest in normal REITs, which is more diversified, lesser ticket size compared to SM REITs? What's advantage to invest in SM REITs?
So Parag, I think it's few advantages here. SM REIT, the returns are normally better than a normal REIT. As you know, the normal REIT, the returns are more like 6%. Sometimes you get 5.5%. In this case, the returns are more closer to 8%. And the tax-free returns are also much higher. Typically, REITs, the IRRs which you get are more like 12%, 12.5%. Here we expect the IRRs to be more in the range of 15 to 17%.
Mr. Sunil happened to ask, what if you sell after 4 years? How will we get our funds back?
So effectively, Sunil, what we'll do is we'll sell the SPV to a buyer. Once we get the funds, the SPV will be delisted. And wherever you invested from, it's like when you sell shares, when you sell it, the money goes back into their account. And that's what will happen here also. So it will be treated exactly like sale of shares.
Question from Mr. Mani R. Do we know property lease start date and end dates? What happens when lease gets over?
Maybe you can answer that. Yeah.
Of course, yes. We come to know about the property start date and lease end dates. The rental agreement, of course, serves as one of the part of the documentation which can be asked and is available for you to look at. Which, of course, you will find different numbers and details mentioned, as good as the space, the tenant, the building, the escalation price, the property tax. So each and everything is detailed in advance. So yes, you will get to know about this. What happens when once lease gets over? Well, about this particular thing, generally the people who we actually look out for a longer lock-in period tenants, right? And if they want to go after the lock-in, they have to give a 6 months notice period. We generally collect a 6 months stamp, the fund deposit. Well, we look forward to get a new tenant in no time. That's what the overall structure is. Question from Mr. Rana Bateli. Looking forward to the IPO, what happens to the already?
I guess Rana, I guess your question is the existing assets, right? As we said, we are looking to migrate those assets also onto the exchange. Once we finish our first SM REIT IPO, we will probably look to migrate the other assets also.
Right. So I do know Mr. Rana Bateli personally because he's invested with us. He's an existing investor. Thank you for that question. Question from Mr. Prem David. I just entered. What is the overall post-tax return expected per year from SM REIT's investment?
I guess the rental income, Prem, as I mentioned earlier, is tax-free completely. So if you're getting 8%, that's tax-free. Because that will be shown as return of capital. On your capital, when you sell, there you're going to pay 12.5%. So my guess is overall, if you get 15% IRR, you could expect a net tax of net gain after taxes around 12.5% or so post tax.
Right. Uh, Question from
You
Mr.
mentioned.
Anantari again. One, what happens to the already existing projects like the Microsoft building of Pune? Will the existing unit holders get any benefit during the fresh launch?
So the first part we've already said that we're looking to migrate those assets. Uh, on the second question, will the existing unit holders get any benefits? I guess here we need to look at what the SEBI regulations are and treat all the individual investors as the same. But we'll definitely keep all of you in mind who are existing investors who could come in early to make sure that you don't miss out on the IPO if it's oversubscribed.
Mr. Rahul, if I buy unit after 2 years, the distribution which is treated as capital return, would that be accounted for my buy price of rupees 10 lakhs or after adjusting distribution of previous 2 years?
No, it will be from your buy price.
Correct. Question, what will be the time frame of your agreement with the lessee? Like, will you enter into an agreement before or after the launch of your IPO?
So the lease agreement is already there, and when we buy the asset, we basically take over the lease from the seller of the asset. So we don't have to find a new person; it's already there. So depending on whether it's there for 3 years or 5 years, typically anything between 3 and 5 years is the time frame of the agreement with the lessee.
Question from Mr. Rana. Will you inform the existing investors when you are going for the IPO?
Absolutely.
Of course. Mr. Siddhartha, okay, when the building gets dismantled for further development, the percentage owned by unit holder changes pro rata as per his and her ownership.
So you will have so I mean, in this case, if it's going for redevelopment, your percentage will remain the same. It will not. So so if you have 100 square feet, effectively of 1,000 square feet commercial building, it will remain as 10%, even when if it goes for redevelopment. Now we don't expect that to happen because we do not buy very old buildings, and typically we try to exit unless and this is unlike very residential, right, where a lot of these buildings go for redevelopment. Commercial, normally it does not happen. We typically keep upgrading the building on our own.
Correct. Suresh, why the yields of mainstream REITs is less than SM REITs as commercial rents are similar?
Suresh, one of the main reasons, actually, there are two reasons for it. So one is up to 20% of their assets can be under construction, which do not give any rental yield. So that's one reason. And secondly, most of the REITs also leverage. So they take loans against it. And typically loans are again 8%, 8.5%, 9%. So they have to deduct that also. And that's one of the reasons the distribution yields are much, much lower than SM REITs. We don't plan to initially take any loans against it. Plus, we do not plan to do any under construction since that is not allowed by SEBI. So these two are the main reasons.
Question from Mr. Shivam. What will be the time frame of your agreement with the lessee? Like you, will you enter into an agreement before or after the launch of your IPO?
So once the lessee typically will be already there, and we will just take over the agreement when we do the IPO. So once it's done, the lessee will become our lessee effectively.
Question from Mr. Suresh. Will all will always a buyer available when you're planning to sell SPV? What will happen if there are no buyers?
So Suresh, in our case, we know this market extremely well because we've been in the market for a long time. So typically we are able to find buyers. But worst case, like you said, if there are no buyers, there are no buyers. But that's normally never been the case. So we should be able to find buyers for our assets.
A question from Mr. Suryakant. Is it a NFO or exiting REIT?
Existing, existing,
Existing REIT,
existing. Yeah.
existing REIT in DMAT? What is symbol and current rate?
Yeah. So it's going to be effectively like an NFO. It's not going to be an existing REIT. It's going to be in DMAT form. So you'll have to have a DMAT. And once we launch the IPO, there will be a symbol, and we will let you know. So presently we are not. We'll probably launch it in a few months.
Question. If any tenant exits, if there is no tenant, how long will you wait or will sell the asset or will you sell the asset?
So typically, Suresh, in commercial, it's always good to sell the asset when you have a tenant. If there is no tenant and if you try to sell the asset, you do not get the right price for it. So we typically will lease out the asset again and then actually sell the asset.
Great. So I have a question for you, Samir.
Yeah.
Now, since you've been following the Fed rate cuts and of course the RBI rate cuts, how do you see the coming year, by this ending of this financial year looking like in terms to rate cuts and how the property prices might shape up? Because you just mentioned that the commercial property price in India or commercial property CRE in India is very bullish.
Yes. So let's talk about the US first. So as we know, the Fed just cut by 25 basis points. I expect them to cut another two by 25 each. So another 50 basis points. And then next year, I expect them to cut by four cuts by 100 basis points. India, given what's happening around the tariffs and the job situation, I do expect India also to cut at least 3 or 4 times from now till end of next year. So given the fact that rates are going to come down, I do feel the cap rates or the rental yields will also start coming down over the next 1 year, which then gives a boost to commercial property also. And hence, I do feel the commercial property will actually do extremely well, not only because of the rental escalations which we have, but also because interest rates are expected to come down. So I think I honestly think next 3 to 5 years, this is one of the best asset classes to invest.
So I guess I was just going to ask you, is it right to invest now?
Yeah,
I guess
absolutely.
it's the right time, right moment, and time to invest in the commercial estate as of now.
That is correct.
Great. Great. Okay, great. Thank you, Samir, for being part of this webinar.
Thank you.
It's always a pleasure to have you. I hope. So I have a question, one more comment from Mr. Parag. Are you also planning to migrate existing fractional CRE assets into SM REIT? What kind of costs are involved in migration from investors' perspective?
So yes, Parag, we are looking to do it. There will be costs which will then be communicated to each of the investors, and we need to get 75% consent before we can migrate. So all these will be told to you when we are looking to migrate.
Question: before IPO, first you have to buy the asset, right? How will you manage the finances?
Suresh, in this case, we don't have to buy the asset because we have a term sheet agreement with the seller to buy the asset, which is a binding agreement. So once we receive the funds in the IPO, that's when we actually transfer the asset to us. So it's all happens simultaneously. So only once the IPO is done, then we will transfer the asset into the SPV's name.
And this is exactly the normal way how it works. So there's nothing
Yeah.
different to it. Uh, well, I don't see any further questions. So again, I'll say thank you, Samir, being part of this
Thank
webinar.
you.
I guess you've been taking this call from what do you call this, from Singapore, and I hope things are good over there. Looking forward to seeing India very soon. And thank you, everyone, Okay, there's a question. How much percentage HBITs hold after IPO?
We will be holding 5% of each asset.
Right. Okay, thank you. Great. Thank you everyone for taking out this time this afternoon. And we're looking forward to start much more webinars in the coming weeks. And we'll surely, you can just log into our website where you will see the calendar of the next webinar always available. Register and please look at and follow us on Instagram and LinkedIn, where we give fresh updates about each and every aspect how HBITS is running. Please feel us to reach us at samir@hbits.co or Abhimanyu. The spelling is a little different. Excuse me for that. Abhimanyu@hbits.co. More than glad to answer and come back to you. This recording of the webinar will be shared with you and of course uploaded on the YouTube channel as well. I'll take it a point. Thank you for all the feedback and
Thank you so
questions.
much.
Thank you very much.